talk a bit about the illusions of control?
Yeah, we actually did quite a nice little piece of research where we got traders to play a computer game. The illusion of control is the tendency to believe that you're in control of things that you couldn't be. And for most of us, it's a common reaction we have when the world's getting out of control. If we haven't got ways of getting back in control of it, we'll often engage in a kind of magical thinking where we imagine we're in control of the world when we're not really. It's a bit like, one of the ways in which this was first studied was with lottery tickets. A researcher called Langer, she gave lottery tickets to members of the public for free and then offered them the opportunity to buy the right to choose their own numbers. And it turned out that people were not up to the value of the whole ticket, but people were prepared to pay a certain amount of money for the right to choose their own numbers, even though they admitted when you pressed them that they understood it didn't change the odds. But because they felt more in control, they felt that they were more likely to win. Another little experiment was to offer the people the opportunity to gamble on a throw of the dice. And for various kinds of bets, they were asked to rate how favourable or unfavourable the bet was. And they did that in two conditions. The first condition was where the dice had yet to be thrown, and the second condition was where the dice had been thrown behind a screen and a cup put over it, and it was simply going to be revealed once they'd said how favourable the bet was. In almost every case, people thought the bet was more favourable if the dice had yet to be thrown. The assumption being that they could exercise some control over it. And another experiment, a light in a booth is moving around a screen at random. Actually, people are asked to go and sit in the booth, and there's a joystick there, and they're told the joystick may or may not have some relationship to the moving light. And their job is to get the light up into the far right-hand corner as far as possible. But by the way, there's always going to be a random element in there. And most people walk out of the booth convinced that they had some effect on the light. So we designed this task for computers where we had this index that displayed as a graph and changed every half second across the course of a minute. And we asked them to press three keys. We gave them three keys on the keyboard, and we said each of those keys may or may not have some effect on the index. It may or may not make it rise on average, fall on average, or increase its volatility on average. If it does have any effect, it'll have an effect with lag and with a random component. And your job is to score as high as possible. And they went through several plays. There was no connection at all between the keys and the index. And we asked them to tell us how successful they thought they'd been. And we also asked them to tell us what they thought each of the keys did and their confidence in what those keys did. And we then used the average of their belief that they had been successful in having an effect on raising the index as a measure of their illusion of control. Because of course they had no control. Came out with nice normally distributed curve. There's a big range across the traders. It was nicely distributed. And then we took data on their performance. First, their performance rated by themselves, second by their managers, on their contribution to desk profits, their risk performance, and I forget the other one. But those three measures, self-rated and manager-rated, and then we had a further measure, which was their total remuneration for the year, which is really fairly heavily bonus-based, so quite related to their performance. And we found that there was a strong relationship such that the higher the illusion of control, the lower the trader performance. In a sense, what that's telling us is something about people's susceptibility to emotion-driven biases, but also, the lower your illusion of control, in a sense, the greater your focus on being realistic about the situation you're in.
So were there traders that realised that they just would have no control and said as much, and then there were them that were convinced that they had control?
Exactly, absolutely.
Brilliant.
People across the whole range, and the really cool thing was it actually related to their, they played this game on a computer screen, nothing to do with their trading, and then it related to their trading performance. It was quite a good diagnostic. It's not one that we continue to use, of course, because now that we've published about it, of course, it relies on people not knowing that there's a relationship between them. So you have to find other ways of measuring illusions of control with people, but it was probably one of the more important findings for us. I think it's worth saying that illusions of control are probably a big issue for retail investors. For me, one of the really interesting things is the way in which platform providers will often provide a simulation version of their platform free to people, so they can invest with pretend money. It's a great marketing device, and it's a great marketing device, I suspect, for the following reason, which is that people will suffer from illusions of control and tell themselves comforting lies while they're doing it. So whenever they make a profit in a trade, they will say, yes, I really made that profit. And whenever they lose money, they will say to themselves something like, yeah, I was just trying something out there. Of course, in the real situation, I wouldn't have done that. And so rather than looking at their total P&L across the period of their trial, when they've probably lost money, they do this kind of odd accounting where they say, I made all of this money, and these are the only losses that really count, which is only part of them. I'm really good at this. And I suspect that some retail traders actually carry that on into their real trading as well. This is the money I've spent on learning, and this is the profit I've made.
They don't do it for long.
Well, if you take probably the area in which this comes into most sharp relief would be currency trading. A lot of people, retail traders, trading on currency platforms. The firms that have currency platforms for retail investors, they don't count them in terms of when they look at how they classify them. They don't count them in terms of how much money these people make. They count them in terms of what they call survival time. This is how long do these people survive before they've burned up their initial investment, which maybe £10,000, and do they refund? And the answer is that within very short periods of time, the largest proportion of retail investors on currency platforms have burnt up all of their initial stake and lost all that money. And then some of them go on and refund and lose all of that as well. If it's a learning process, it's a very expensive learning process. That's not to say there aren't people using these platforms for quite good reasons, for example, to hedge currency risks in other parts of their portfolio and so on. But there's an awful lot of people out there who think that they can time the market in the currency markets, despite the fact that almost all of the movements in currency markets are driven up by bank against bank trading, and these are people with access to timing advantages and information advantages that the average retail trader could not possibly have. So the idea that somehow you can have a better idea of what's going to happen in the market than the other major players in the market is kind of an odd one.